working properly. Okay, well, let's see what we have here in this chapter. Okay. 6-24, usually what I do on this one is I just ask as students if they have any question as to how an account would be treated. So that means if you haven't done this already, you'll have to do it to put it into the Dropbox. They were having you take accounts, this is similar to the Hillsburg hardware example, and they were having you place them into the either sales and collection, acquisition and payment, etc., to 5 different cycles. Does anyone have a question as to where something should appear? In some cases, it might appear in more than one cycle.
Capital acquisitions or repayment?
Yeah, the capital acquisition repayment is going to be your long-term debt primarily and your stockholders' equity. So for capital acquisition and repayment for the balance sheet accounts, you'd have your common stock, you'd have your loans payable, your notes payable, you'd have an interest, I would call it interest payable. Now in this problem, they call it accrued interest expense. Boy, that's deceptive because you see the word expense, but the accrued means it's basically accrued interest payable. Also, cash would be involved here. And common stock and retained earnings, of course. I think I mentioned common stock, also retained earnings. So you'd have your common stock and retained earnings, your loans payable, your notes payable, accrued interest payable or accrued interest expense, they're calling it. And don't forget cash. And on the income statement side, only one. What's the obvious one? We had accrued interest payable, so we have interest expense. Gary's right, interest expense. Inventory and warehousing only has 2. What's the balance sheet account in inventory and warehousing?
Inventory.
Inventory. And on the income statement side, purchases.
Income statement?
Purchases. What's in sales and collection? On the income statement side, sales. Also, what else on the income statement side? One other account. What's related to sales and collection?
Accounts receivable.
Well, that's on the balance sheet side. And what happens when they don't get collected? Bad debt expense. So on sales and collection, under income statement, bad debt expense and sales. Now, they had sales discounts and returns allowances, all that, but that would have gone in there too. But that's not in the problem. On the balance sheet side, yes, accounts receivable, the allowance for uncollectible or doubtful accounts, sales and collection, so cash, and one more. What's the other one? It's in the second column of the problem. What's the other balance sheet account? Notes receivable, trade. Notes receivable, only because it had the word trade. Although if you just said notes receivable, oftentimes a client who can't pay their account receivable within the requisite time might give us an interest-bearing note. Payroll and personnel.
Did you say prepaid insurance was not on the balance sheet?
Not under sales and collection.
Oh, sales and collection.
Where would that go, though? Amanda, where would that go? Prepaid, it would be, she had prepaid insurance, which is down under the balance sheet column for which cycle? How about acquisition and payment? Yeah, acquisition and payment. How about payroll and personnel? 2 balance sheet accounts. One's cash.
Sales, salaries, and expense.
Well, accrued sales salaries, again, that would be salaries and wages payable. And under the income statement, Barry's right, he's got sales, salaries, expense, and salaries, office, and general. So acquisition and payment, we just said prepaid insurance, what else? Start with assets. What else would be an acquisition and payment?
For the balance sheet, I'm sorry, income tax statement?
Under balance sheet, acquisition and payment balance sheet. Well, cash. What else?
Accounts payable.
Accounts payable. Keep going. Inventory is part of this too. Inventory is part of this. Furniture and equipment's part of this. Acquisitions. We said the prepaid insurance, Amanda mentioned that. I guess if we have furniture and equipment, we have accumulated depreciation, furniture and equipment.
Yeah, I was gonna say, where does that go?
That would have to go the same one,
Acquisitions.
under acquisition and payment. One more under the balance sheet column for acquisition and payment. Oh, two more, excuse me. They're payables.
Accounts payable?
That one was listed, accounts
Oh, okay,
payable.
okay, sorry.
Accounts payable.
Property tax payable,
Interest.
property tax payable, income tax payable, income tax payable. Notice we're putting the note payable and the loan payable separately down in capital acquisition and repayment. So we're not putting every liability here because we have that extra cycle. Income statement, accounts, acquisition and payment. Purchases, again, notice purchases was in two of these. It was also down in inventory and warehousing. Advertising expense. Depreciation expense. Income tax expense. Insurance expense. Seems to be a trend here, isn't there? Property tax expense, rent expense, and lastly, telecommunication expense. So most of our expense accounts went into there, didn't they? So again, that's the part of the problem I'm interested in. There was a part B as well, but I want you to think about the cycles of the audit, the accounts, because the accounts within a cycle relate to one another. So when you're researching or getting the documentation for a transaction that's recorded, if it's something like debit rent expense, credit rent payable, they're going to relate to one another. Okay, so that was the purpose of that. Remember, we're doing a foundation. Okay, 6-26. I'm going to skip this one. Do you mind? This is the management assertions. And you don't have to do it either. I didn't remember if I included that or not. Okay, so we'll skip that one. Let's go to 6-27 though. Where's my master sheet here? There it is.
So we're answering A, B, and C for this one, right? Oh, no, I'm sorry.
No, the one we did, no. Just what I went over. Let's see, chapter 6.
Let's see.
27 is 29. Excuse me, I have my conversion chart. Because I have the 15th edition solutions manual, I had to convert the 15th to the 14th, the Bill's conversion. All right, 6-27. Okay. They give us some specific transaction-related audit objectives. They want us to do the management assertion. I'll give you that. but can you help me do the transaction-related objective? Okay, that part is what I'm interested in, because that's the way I want you to develop a way of thinking here. Okay, letter A, this is A through F. It's on page 169. Recorded cash disbursement transactions are for the amount of goods or services received and are correctly reported. Now, I'll give you the management assertion, because I don't care about that, that's part B. Accuracy. What's the transaction-related objective? These are for the amounts that are received are correctly recorded. I could actually think of two here. That's what they want, it varies, right? They want accuracy. They want accuracy, but I also kind of thought of correctness, or of completeness too, but anyway. Put accuracy down then, accuracy for both B and C. Letter B, cash disbursement transactions are properly included in the account payable master file and are correctly summarized. Management assertion here, accuracy. This is one that could be done by computer. And for the transaction related, anyone remember which it would be? Making sure that the master file and subsidiary ledgers agree. No. Posting and summarization. It's posting and summarization, and if it were balance related, it'd be detailed tie-in. Again, these are new to you. I want you to become familiar with these.
So A and B was accuracy?
No. B was accuracy, and C is posting and summarization. Okay, letter C. Part A here, that essay, you don't have to do the essay, part A. We're just doing B and C. Letter C says recorded cash transactions are for goods and services actually received. So everything that's recorded is legitimate. Now, so for the management assertion, it's occurrence. What is it for transaction related? Now, if this were balance related, it'd be existence. What's the equivalent of existence for transaction related? Making sure everything that was recorded is legitimate.
Occurrence.
Occurrence, yes, occurrence. Occurrence, existence, whatever you want to call it. Exactly, everything that's recorded is legitimate. We go back to the documentation, good. Letter D is a tough one. Cash disbursement transactions are properly classified. Management assessment or assertion, classification, transaction objective.
It's not classification?
Classification, yes, yes, it is. A rose is a rose is a rose. Okay. E, existing cash disbursement transactions are recorded. In other words, now, everything that occurred has been reported. Management assertion is completeness. Transaction related is?
Occurrence.
No, occurrence is everything that was recorded as legitimate. This says everything that occurred has been recorded.